Welcome to the MLO SAFE Test Study Guide. Welcome. This presentation is designed to help you prepare for the MLO SAFE Test, a key exam for mortgage loan officers. We will walk through the essential topics, tips, and strategies to ensure you're well equipped to pass the exam with confidence. Whether you are new to the industry or looking to brush up on your knowledge, this guide will provide valuable insights and resources to help you succeed. Let's dive into the core concepts and important details of the MLO SAFE Test. Let's start with periodic interest payments. This is the part of your mortgage payment that covers the interest you owe on the loan for a specific period. There's also something called per diem interest, which is the daily interest you owe. The formula to calculate per diem interest is per diem interest equals loan amount multiplied by annual interest rate divided by 360 multiplied by days. For example, if you have a loan amount of $70,000, an interest rate of 6%, and you're calculating interest for 15 days, it would look like this. Per diem interest equals 70,000 multiplied by 6% divided by 360 multiplied by 15 days equals 175. So, you'd owe $175 in interest for those 15 days. Principal, interest, taxes, and insurance, PITI. PITI stands for principal, interest, taxes, and insurance. This is the total monthly housing expense for the borrower. The principal is the part of the payment that reduces the loan balance. Interest is the cost of borrowing the money. Taxes are property taxes, which are often collected through an escrow account. Insurance includes homeowners insurance and possibly private mortgage insurance, PMI, or mortgage insurance premiums, MIP, if your down payment is less than 20%. Escrow calculations. If your loan-to-value, LTV, ratio is above 80%, lenders usually require you to pay into an escrow account each month. This account is used to pay property taxes and insurance premiums. Lenders can hold a maximum of 2 months' worth of property taxes as a cushion. The idea is to make sure there's enough money in the account to cover these big annual expenses when they come due. Mortgage insurance protects the lender in case you default on the loan. It's usually required if your down payment is less than 20%. The monthly mortgage insurance can be calculated using this formula. Monthly mortgage insurance equals mortgage insurance factor multiplied by loan amount divided by 12. For example, if you have an FHA loan with a UFMIP rate of 1.75% and a loan amount of $120,000, the monthly UFMIP would be FHA monthly UFMIP equals 1.75% multiplied by 120,000 divided by 12 equals 175. So, you'd pay $175 each month for mortgage insurance. The down payment is the lump sum you pay up front when buying a home. A larger down payment can reduce your monthly mortgage payments and the total interest you'll pay over the life of the loan. It also improves your chances of getting approved for the loan because it lowers the lender's risk. There are a couple of ways to buy down your interest rate. A permanent buy-down involves paying discount points up front to reduce your interest rate for the entire life of the loan. A temporary buy-down, like a 2-to-1 buy-down, reduces your interest rate by 2% in the first year and 1% in the second year before returning to the original rate. A fixed buy-down permanently reduces your interest rate for the entire loan term. Closing costs are the fees and expenses you pay when you close on your home. These can include things like loan origination fees, appraisal fees, and title insurance. Prepaid items are costs due at closing that cover future expenses, like property taxes and homeowners insurance premiums. You might also have to pay prepaid interest, which covers the interest that accrues from the closing date to the end of the month. These are the key points to understand about periodic interest payments, PITI, escrow, mortgage insurance, down payments, buy-downs, and closing costs. Each plays a crucial role in your mortgage and overall home buying process. Congratulations on taking the next step toward becoming a certified mortgage loan officer. We hope this study guide has provided clarity and a solid foundation for your exam preparation. Remember, success comes with dedication and practice. Stay focused, keep reviewing, and you'll be well on your way to passing the MLO SAFE test. Good luck with your studies, And feel free to reach out if you have any further questions or need additional resources. Stay confident, and you've got this.